Well, good day, smart traders, and welcome to this weekly market review. We are just going to have a quick look at what happened in this past week. Before we do get started with that, just to introduce myself, my name is Francois du Plessis, and I am the Senior Analyst and Trading Specialist here at Smart Online Trader. I'm also a licensed FSCA financial advisor and trader, and I've been in the financial industry now for a little over 7 years. Before we do get going in the market, kindly just familiarize yourself with the risk disclosure currently on your screen. And should you want to read this in more detail, it is available on our website. So kicking things off from an economic point of view, having a look at our economic calendar for the past week, we obviously had our build-up towards NFP. So that was our non-farm payroll report that came out on Friday. And during that build-up, we started the week off with the manufacturing PMI that came out. It obviously came out lower than expected. And this created some slight weakness within the US market and US economy, which did give us some fantastic trading opportunities. Further down in the week, we also had the Australian and New Zealand interest rate decisions that came out. The Australian interest rate actually very interesting, which didn't increase as much as expected. So there was an expected 50 basis point increase, and we only saw a 25 basis point increase take place. The NZD, so that's our New Zealand interest rate, obviously came out as expected with that 50 basis point jump. Things really got interesting further down in the week, though, from Wednesday, when we had our initial precursor to the NFP report that came out on Friday, which is our ADP non-farm employment change report that came out on Wednesday afternoon, which was the first indication that there was some strength still left within the US employment market. And this kind of set the pace for our NFP report that came out on Friday, and obviously came out higher than expected, which led to a massive amount of good trading opportunities, which was indicated via our coaching sessions and as well on our SOT trading channels. So if you are a member on those channels, you would have obviously benefited greatly from those trades. Speaking about trades, let's get into the actual market. So having a look at our dollar index here. So obviously from last week, we've had our short positions that we were running and having a look at, due to the fact that we obviously knew that we were preparing and in the build-up towards the NFP report that came out on Friday. And we had our initial selling opportunities at this high point, as well as when we interacted with that diagonal resistance level over there. Once we actually dropped further down and we got to our 61.8% fib level over here, which is also in correlation with the ADP non-farm private employment report that came out. And as I said, from there, we started seeing a change, and our bearish momentum on our dollar index kind of ran out of steam. And this is when those buying opportunities within the dollar started taking place. And we had this nice upward momentum, which lasted until Friday at market close. Looking at this from a trader's perspective and looking at what trading opportunities we had, we obviously could see there as well. So let's switch over to Euro USD. So as you can see, as I said, based on even last week's trade ideas that we did share, we had this beautiful buying opportunity when we got to at the bottom of our channel here on Euro USD, which also correlated with our dollar index. And that allowed us this beautiful buying opportunity from here onwards. Then once we actually interacted with that 61.8% fib level on our dollar index, that correlated with the 50 daily EMA on our Euro USD pair. And from there, during our coaching sessions, as well as on our trading channel, we started to share some trade ideas regarding the short position, as well in that build up towards NFP, as our analysis that we did from of a fundamental point of view clearly indicated that there was still a lot of strength left in the US employment market and the job market within the USA. And this obviously stated the opportunities for additional short positions on this, as we saw that there is still some strength left within the market, and that played out exactly as we thought it would. Moving over to commodities, let's have a look at what happened during this week on crude oil. So crude oil was very, very interesting from of the beginning of the week. So literally from of the start of the week, we've literally seen massive, massive bullish momentum in this specific instrument, starting right over here. And that was primarily because of the fact that the OPEC plus countries did state that they are looking at decreasing their outputs on oil. And the initial consensus was that they were going to decrease their output by 1 million barrels per day. So this would have automatically then decreased the supply of oil, which in return increases the demand. And just looking from an economic point of view, that will obviously push the price of oil higher. However, when they actually met and they actually made their final decision, they decided to decrease the supply of oil by a total of 2 million barrels a day, which is literally double what they said originally. And this made the market go absolutely mad. And this is why we can see literally on Friday that final massive spike that took place there. Looking at it from a trading opportunity point of view, we did state that during our coaching sessions, as well as on our trading channels, that should we have a nice clean break above our channel, so this was right over here, as well as a break above our resistance level, which has now obviously become support, then we can definitely start looking for some trading opportunities. Dropping this down to a 4-hour time frame, we can actually see that those trading opportunities really did present themselves as predicted and as our analysis showed. Why? Because of the fact that there we had our break of the channel, we had a beautiful retest right there, and there was our breakout. So from here, you could have entered into the trade with a nice stop loss around the 50 EMA from here, and you would be running in profits at the moment and truly smiling, having a fantastic weekend right now, as your trading account would have really, really grown based on what was shown on this specific pair. Finally, let's have a look at the indice market. So just having a look at S&P 500. We also started the week off massively, massively bullish. We had two of the greatest bullish days that we have had in months on Monday and Tuesday, as you can see over here. And that obviously created some excitement within the market, as initially there was some glimmer of hope that with the next US interest rate reports that they are going to not be as hawkish. And this has now obviously been completely squashed after the US employment rate or US employment market, so that US job market still showed that it has the ability to take the punishment that the Fed is currently dealing out on them. And as we then got to that 21 EMA, so that is our daily dynamic resistance level over here, which also then interacted with or correlated with the ADP report on Wednesday, we started seeing those initial selling opportunities and short position opportunities from there, which we did share in quite a detailed market breakdown on this specific instrument via our LMS channel. And this obviously just continued onwards from there after the NFP report came out on Friday. However, for the first time in quite a long time, the S&P 500 actually ended the week in a positive note. So even though there was massive bearish momentum towards the end of the week, because there was such a massive spike in the beginning of the week, the S&P 500 still ended the week 1.5% up, which is still, for all our stock traders and indices traders, a bit of a good week. You just had to be able to actually benefit from the up and down momentum and plan your positions accordingly with a decent risk management and some well-placed stop losses and take profits. You would have greatly benefited from this market as well. So guys, that is our market review for this week that has passed. Should you want to get in touch and actually get added to our trading channels as well as attend our coaching sessions, our contact details are currently on your screen. We'll also leave it in the description below with some links there for you guys to visit our website, which is smarttradecollege.com. You can also email us at info@smarttradecollege.com or get in touch with us via WhatsApp or even give us a call. Our details are on the screen. So have a fantastic weekend further and a profitable week next week. And as always, may the pips be with you. Cheers.